One of my students secured a 100K payout with Epics using this simple trading strategy that I teach my students. But in this video, I'm going to teach that strategy to you for absolutely free so you can use it as well. The markets, the trading is supposed to be easy. I know for some it may seem hard, but the truth is if you keep things simple, that's when you're going to see consistency, because if you fall into this concept of analysis paralysis, you might just mess everything up. And that is exactly, this exact strategy is used by my students. And again, as I showed you before, Hank, he secured over 100K payout. And there are a lot of students getting the same payouts using this simple model. So first thing first, this strategy is for gold, okay? So we use this strategy on gold because gold is, it kind of gives you the best setups possible with this strategy. And it is really just following simple order flow with different types of confirmations I'm going to teach you in this video. And I'm going to keep it as mechanical as possible, so it's not like complicated for you. You will not have to use any discretion except in one part, which I'm going to talk about right now. So first thing first, what you can do is start on the 4-hour time frame or the 1 hour. So if you are a scalper, right, if you want to trade on the 5-minute, you should start with the 1 hour. And if you want to start on to like intraday basis, you can start on the 4-hour time frame. But now I'm going to start on the 1 hour. So when you go onto the 1 hour time frame, within like 3 seconds, right after you open gold, you want to see if price is going up or going down. Okay, so if we are making higher highs, higher lows, higher highs, higher lows, then the order flow is bullish, right? And similarly, if we are creating, like let's suppose lower lows, lower highs, lower lows, you will know that the order flow is bearish. Now, the key here is that within 3 seconds, you should be able to identify the direction of the market. Because if you can't identify the direction of the market within the first 3 seconds, the price is most likely just consolidating. Okay, and you're just getting confused, and it's not your problem. It's just the market telling you that the market structure is not clear. Okay, so let's say that the market structure is bullish, so we are making a higher high, higher low, higher high, higher low. Now, when you see that the order flow is bullish, what you want to do is that you can mark out every single fair value gap in this leg. So let's say there's 1 hour fair value gap here, 1 hour fair value gap here. Right? Now, when we know the order flow is bullish, we can utilize every single fair value gap, bullish fair value gap. Okay, so let me zoom in a bit. Now, once you have the 5-minute the 1 hour fair value gap marked out, and we know that the order flow is bullish, you are waiting for price to tap back into that fair value gap. Once price is inside that fair value gap, what you want to do is you want to drop down to 5-minute time frame. Okay, that is where the magic happens. Now, the truth is, guys, there are a lot of strategies. There are different ways to trade the market. But what I've noticed in these past like 7-8 years of trading is that if you are not trading with the trend, your win rate significantly drops. And basically, the odds are not in your favor. However, you could change that very easily by just trading in the direction of the order flow. And if you can successfully identify the direction of the market within 3 seconds, that's the technique that I use. I open the chart, I see, okay, I have 3 seconds. If I can clearly identify the market direction, that's when I'm going to trade gold. If not, I'm not going to trade it. Okay, because as I said before, guys, the price might just be consolidating and you might just start overthinking about this. We broke this low, right? So maybe we are bearish, but no, we're just consolidating. So that's the thing, guys. And that's exactly how Hank just secured a massive payout. And there are just so many students. I wish I could show you all of them. So here's the thing, guys. 1 hour fair value gap, the order flow is bullish, price taps into the hourly fair value gap, then you drop down to 5-minute time frame. Now we are trading gold. So once price is inside the hourly fair value gap, you drop down to 5-minute time frame, and then you want to look at silver. So you go here and you type in XAG USD, and that's when you get silver. Now you have to identify SMT divergence, okay, around the fair value gap or within the fair value gap. So what is SMT divergence, right? So if gold makes a lower low, lower high, and lower low, but silver makes a lower low, lower high, and then it fails to create another lower low, right? So this is correlation, and that means that there's SMT divergence, right? And this type of pattern is what I'm looking to see. or it could just be flipped. So if silver makes a lower low, lower high, lower low, gold can make a lower low, lower high, and fail to make another one. And this type of setup where we don't make another lower low, that is A plus, because that shows you that there's weakness in terms of being bearish, and there's there's momentum in terms of being bullish. I'm going to give you guys some examples and you will understand it correctly. So the second step, as I said before, is that you have to look for SMT within the 1 hour fair value gap on the 5-minute time frame. Now, once you have SMT divergence, you have to then come back to the entry model. There are different ways to enter, but there are two primary entry models that I use. So I use CIST. So within this leg, from this low to this high, you identify continuous bearish candles. So continuous bearish candles, let's say from here, we had continuous bearish candle, 1, 2, 3. That is your order block. Now, when price closes above this order block, that is your CIST. That means that there's a shift in the fractal time-based order flow, and that is giving you confirmation. So from here, you can take your entry, you can put your stop below the SMT leg, which is right here, and then you can go for 1 to 2 risk to reward. Okay? It's as simple as that, guys. And there's some few more things that I have to teach you, so you have to keep on watching till the end because I'm going to give you guys some examples. But pretty much, this is what I look for. And the second entry model is a bit safe, but honestly, I haven't seen much difference. But you simply look for the old market structure shift. So we have a lower low, lower high, lower low. We break above this level. You wait for a retest entry from the breaker block, and then you can ride the move to the upside. Similarly, guys, if the order flow is bearish, what you would do is, again, wait for price to tap into the hourly fair value gap, drop down to 5-minute time frame, look for SMT divergence, then look for market structure shift or CIST, and then you take your entry. And that is exactly how the students are getting insane payouts. No one in the industry is doing that. Okay? Yeah, sure. They will show you your payouts, but what about the students who are learning from them, right? What about you guys who are watching my YouTube videos? For example, I uploaded, if you watch a recent video on YouTube, one before this, the 8 a.m. liquidity sweep pattern, it worked today as well. It works, guys. Everything that I teach you is not that because I want views. I don't give a fuck about views, guys. Come on. I don't care. Okay? As long as I'm able to make my name out of in this whole trading community, that okay, what I'm teaching you is actually working, that's what really matters. I need that ego boost, okay? I need people to say my name, that whatever he's teaching, it's working. So now I'm going to give you guys some examples. All right, guys, so here is example number 1. And let's say you open the chart here. Where is the market going? Within 3 seconds. Look at this. It's going down, right? You don't have to overcomplicate this shit. Yeah, sure, we were bullish here, but as soon as we started disrespecting the bullish PD arrays, that means that there has been a shift in the order flow on the small perspective, right? And clearly, we can see we are making lower lows, lower high, lower low, right? And this is the order flow, breaking lows again and again. So with that in mind, you could also say that, okay, we have these equal lows down there, that there's this candle here as well, which is abnormal, right? You could say, okay, this is our draw. This is discretion. So this is the discretion part where you look at your draw. Okay, maybe if we reach this level, the trend could shift, right? But since we are coming down from here, every single fair value gap is utilizable. Now, however, if this fair value gap fails, right, and it gets inversed like this, right, that is your first confirmation that, okay, we might be bullish here. And then if we break another PD array, which would be, let's say this, this auto block over here. Let's mark this out as that, the breaker block. If we go above that, that is your second confirmation. Okay, we could be pushing higher. But if we get confirmation off of this fair value gap, considering the fact that we are bearish at the moment, we can look for our setups. So this is our hourly fair value gap. And on the left side, what I'm going to do is I'm going to open silver as well. Now, what you have to do is mark out the same fair value gap or the same level. Okay, so for example, on silver, we don't have an hourly fair value gap, but on gold, we have. So around this level, this area, right, we have to look for SMT divergence. If gold is in fair value gap, we can start looking for SMT divergence. So now what you do is drop down to 5-minute time frame. Okay, so let's play this through. And you can clearly see that price push down. And why did it happen? So this is the fair value gap. And let me disable the sessions here so it's a bit cleaner. So you can see when we tapped into the fair value gap, we made a higher high, higher low, and then we failed to make another higher high on gold. But however, if you look at silver, we made another higher high. You can see right here, right? We made another high. So that is your SMT divergence. Now, after you have SMT divergence, look at these continuous bullish candles. 1, 2, 3. So when price closes below these consecutive bullish candles, that would be change in a state of delivery for me. Or you could have also taken the inversion setup here. It's totally up to you, but I use CISD. So now you could have taken your entry at the retest here, right? You could put your stop above the SMT leg. You could have put it here, or you could put it above this, but I would put it right here. And then you guys, you can clearly see that where did we go? The previous draw on liquidity that we marked out, which was those equal lows, right? Pretty simple, guys. Look at this. We tap into the hourly fair value gap, 5-minute SMT. We know the direction of the market. It is clearly bearish, right? And that is A+. Let's move on to the next example. All right, guys, here's example 2. So over here, you can see that we were clearly bearish, right? And then we switched up to being bullish. So we were continuously making higher highs, higher lows, right? Higher high right here, higher high once again over here, right? And then we made another higher high. But notice what happened here, guys, okay? We had this fair value gap on the hourly time frame. So let me mark that out. This fair value gap, and that got inversed. Now that is your first sign that the order flow has shifted. The second sign was this becoming a breaker block, and also we broke below this low. So now the trend, the order flow is to the downside, okay? And now what we can do is utilize bearish fair value gaps once again. So I'm on the hourly time frame. We can clearly see we have this hourly fair value gap. So we have marked that out. Let's drop down to 5-minute time frame and see what happens. Okay, so look here. We have this high. And let me play this through. Okay. Now, we have taken out this high on gold, right? But the same high on silver is unswept. So if I mark it out like that, okay, perfect. So you can see we are inside the hourly fair value gap. We have SMT divergence with this high inside the fair value gap. That is your second confirmation. The third confirmation is CISD. So look at over here. We have 1, 2, 3 consecutive bullish candles that swept liquidity. That is your auto block. Now I want the price to close below this auto block. It's not currently an auto block. In order for it to become an auto block, we need to see price close below this level. Okay, and then that would become auto block, bearish auto block. But these consecutive bullish candles, right? That's going to tell you if there's a change in the state of delivery. And we need to see a closure below this level. And right here, we got a closure. We have SMT, check. We have 1 hour fair value gap, check. And we have a break below this level. So a retest entry, check. We can put our stop right above this high, and we can go for 1 to 2. Okay, so let's see how this plays out. Bam. Now, in most cases, what I do is I go break even at 1 to 1. Okay, let me give you guys one more example. All right, in this example, I want to give you a swing trade example, you could say, okay, because I want to teach you that this works on every single time frame alignment. So if you want to take swing trades, you can use the daily time frame fair value gaps and order flow to take entries on the 1 hour time frame. Then you can use the 4 hour time frame as your higher time frame and take entries on the 15-minute time frame, right? And then you can use 1 hour time frame as your highest time frame and 5-minute for your entry execution time frame. So clearly we were bullish, right, on the daily time frame, continuously making higher highs, higher lows, higher highs, higher lows. Now, there was a sign that we got, which was this inversion to the downside, indicating that there could potentially be a shift to the downside. But what happened next is that we tapped into this auto block, right? And then we had inversion on the daily time frame, indicating that we are still bullish. And right here on the daily time frame, we have a fair value gap. So now, within this fair value gap, I drop down to 1 hour time frame and I look for SMT divergence. And over here, you can clearly see that we had this low that was not taken out on gold, but we had this low that was swept on silver. That is your second confirmation. And then you could have used CISD or any type of entry confirmation, because this is on the hourly time frame. So basically you could have taken, after this market structure shift, which happens right here, you could have taken your entry from the fair value gap. right? So let's see how this plays out. And it just pushes up. And this is swing trading. Like, you can catch huge moves with this, okay? Again, there was a breaker block as well. If you wanted to utilize that as well, you could have done that, no problem. And this would have given you still a decent risk to reward. That's going to be it, guys. If you are interested in learning more, check out the link in the description and join us. I'll see you guys in the next one.